All right, Sunday, August 16th, 2026, 9:30 p.m. Eastern Standard Time. Interesting past couple of weeks. So, first theme I want to highlight and walk through is the return of precious metals. So, we're looking at the gold chart right now, and we can see a pretty distinct breakout. We've been in this downtrend for really quite a while here. I want to see if we can even track. I mean, this was back in the beginning of the year in January, and we've just been selling off all the way until really bottoming out here in about June. So 6 months of just down, and now we're starting to go sideways and now making a leg higher. And we can see the same thing on the silver charts. Same thing, peak in January to a low down here in June, and now sideways and then heading higher. So I like these charts. Copper has actually been a lot more bullish, also long here per my momentum system. Just been sort of making these higher lows each time. So very bullish indication here that copper will also continue higher. And yeah, just a pretty high conviction trade for me. I think the risk to reward here is really nice. I think I was in somewhere around early to mid July, so somewhere stop down here, and we've just been heading higher on both gold and silver. So interesting trade. Stuff that I'm seeing as far as setup on the short side, both coffee and cocoa have both been signaling a short for me. These are really hard for me to short because they're such large size contracts, but I have noticed a lot of top wicks here over the past couple of days here. And it's really hard to know what direction we're going. Top wicks definitely tell me that there's not a whole lot of buying pressure to go higher here, but there's also potentially bullish consolidation here, a bull flag, really a tight wedge here. So I'd like to see a breakdown, and I would anticipate one, but really hard trade to make here with the volatility. I mean, we've had some days where this thing moves from 300 to 356. I mean, it's just such a massive move for these contracts. They're very large size for cocoa and coffee, so just a really hard trade. And then another thing I'm noticing here, I mean, bonds have been selling off and selling off on inflation worries and the curve steepening, and yeah, just not a good look here, especially if you look at like the 20-year TLT. I mean, this thing's on like 25-year lows, so not something I'd want to be buying necessarily, but I do think there's a contrarian opportunity there, and we're starting to see positioning highlight a potential long play. So I do think the bottom is near. I mean, the risk to reward is nice, but you're not really going to get a whole lot of upside if inflation's going up. It's just a really tough trade there, but I do like this. I mean, I do like that we're on 30-year sort of support levels, but also at the same time, positioning data starting to show potential opportunity there. So just something I'm watching. Another thing that I've been noticing here, and you can actually it actually sold off the past couple minutes before I started the video, but one thing I've noticed here in the overnights for stocks like Alibaba, and I think China in general, there's a real good opportunity to buy and go long here. I've noticed that when you start having these massive gaps in the chart, it's usually the beginning of a big move higher. So let's actually look back on these two recent runs here in the past year. So August 2025, we had a big gap up. And then what did price do? It bounced around and it gapped again, gapped higher, all the way up from about 118 to a high of 193. And it all started with a gap in the chart. And then same thing if we look here on the second sort of leg, which, turned bearish, right? It was a lower high, but we ended up with a gap here. We ran higher, bounced around, gapped up again. We had a double top there, and then it sold off. So I've noticed every bull cycle starts with a gap. And look back here, early July, what did we have? We had a nice gap up. And then since that gap up, that opened at 105, 106, we're now trading around 123. So 20% gain in just a couple of weeks. I think we're due here for a leg higher in Alibaba. I think Alibaba is the right risk to reward. I don't like Baidu as much here, but it's similar, right? I actually think this one's been a little bit more bearish and lagging behind, but very similar in terms of gaps, right? We saw a gap up, and then we saw a huge gap, and then we traded higher and higher. I think Alibaba is a good trade here. I like the price action. I like this bottoming action. I like this higher low. As long as we maintain this sort of 111, 112 price, I think we're heading higher. And then a new strategy I have been toying with is earnings failure reversals. And we've got a couple stocks we can highlight here in sectors. One is ASTS. It's AST Space Mobile. They had bad earnings. I believe they missed their earnings, and the stock sold off in the after hours and then immediately rebounded. The following open, it reclaimed the exact price that it sold off at. We'd have to switch charts here in order to see it, but I believe earnings was somewhere around here. We sold off, and then we immediately reclaimed, and now we're consolidating. And it's the same thing with Rocket Lab and the entire space sector. We've seen this sell-off post-earnings, and then it reclaiming the exact price and heading higher. And then the opposite is true for Riot. Riot, we actually saw a massive partnership with, I believe, OpenAI, I believe, was the partnership. And we saw just all this bullish catalyst. They had good earnings, they had a big partnership announcement, it headed way higher, and then it sold off. And it has not been able to reclaim. And it's just been massive volatility, but overall bearish price structure. And to me, that's a news failure. There's an opportunity here to go short on Riot. So short Riot, we're long Rocket Lab, we're long ASTS. I think there's some good opportunities here as far as risk to reward and good potential upside. So that's sort of what I'm looking at. Not a whole lot of other setups this week. Like I mentioned, there's coffee and cocoa. Coffee is a full setup. Cocoa's near setup on the short side, but just too large, too much volatility. I like the 30 years for maybe buying a little bit of TLT. I think there's a good opportunity here to be selling out of some of your NASDAQ or high-flying sort of tech positions. So as this thing starts to head back to make new highs, which we're still a couple percent off of all-time high, I think rotating out, buying a little bit of bond exposure makes sense. I think buying a little bit of international exposure also can make some sense here. Again, very bullish still. I think the market is just showing us resiliency. It's showing that we're going higher, and I think tech is going to continue to lead. The NASDAQ has been leading even right now in these open hours. We're in the lead with NASDAQ over the Russell, the S&P, and the Dow. The NASDAQ is in a nice lead to open this night session. I see the NASDAQ just continuing here, but I'm just very aware that that's the market trade, right? Like that's what people are talking about. People are talking about tech and this thing going higher. So I get a little bit cautious when everybody's talking about the same trade. And I think that trade right now is just staying long NASDAQ. So I'm a little bit cautious. I'd like to sort of scale out of positions, but we've had some really nice winners here rotating into Atlassian and HubSpot that have all had some bottoming patterns and have moved higher. These are positions that we dollar cost averaged into during sort of the SaaS sell-off. GitLab. Let's see if I can think of any others. We had Adobe. All of them putting in nice bottoms and heading higher. The risk to reward there was just absolutely incredible. So we added, and again, you don't want to catch a falling knife here. So you don't want to continue to buy and buy and buy with large positions as this thing is just going down and down. But nice accumulation value play. You put 1 or 2% in, and you end up having a nice recovery that ends up turning into, you know, a 30, 60, 80% gain. So we saw that in Team especially. I believe this is up like a 2x from where I'm in at around $80. So again, you don't try to catch a falling knife. You don't put a bunch into this, but you make small bets in the contrarian elements, which to me at one point was the SaaS basket. Still like HubSpot a lot here. I think this is still pretty beaten down and worth a buy. Anything under really this 258 resistance. I mean, I like buying this sub 200. You can see that I've got a little sell order. If we bounce back to 242, and then I've got to buy about 190 if we can get back down there. I really like this thing at sub 200. I would love to continue to accumulate. I don't think these SaaS companies are going anywhere anytime soon just yet. I think they're all going to be enabled by AI. They're not going to be displaced by AI. I don't see Anthropic completely displacing all CRM systems. I don't see people ripping those out and having them maintained by a Claude. I just don't see that yet. I see these companies staying relevant, by implementing AI into their existing workflows, their existing customer base. I see layoffs creeping up potentially for these big tech companies. But with that said, I believe the margins will still be there. People will get replaced and displaced by AI, and margins will compress because of competition. But with less employees, you're going to still have strong margins. You're just going to be more effective, more efficient as an organization with less people and AI doing more work. And I think that's going to keep margins in line, even if there are layoffs. And we've seen that as a theme. We've seen companies do mass layoffs like Amazon, and the stock actually trades up on that news. So, yeah, it's that's my thoughts so far. I put stuff into the report here, and that's in Discord, and we will talk during the week. So thanks for listening. We'll talk soon.